All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is July 31st, 2024. There is a lot going on this morning, and I mean a lot. Markets are all over the place. We got big story after big story. Let's just get right into them, shall we? Microsoft was the big one, came out earnings after the bell yesterday. It was a big earnings and revenue beat, but that is not the story anybody is talking about. There are two particular things that everybody wants to hear about when it comes to Microsoft. What did their cloud revenue growth look like? And what does their capex look like? Because that is what's going to inform this AI mania and whether or not this is the pin that finally burst this bubble that at least some people are starting to acknowledge exists. There are still those that are in denial, and they're adorable, and we wish them luck, but it is clearly a bubble that's going on. And, well, let's just talk about what we had. Microsoft's earnings, their cloud growth was disappointing, mildly so. That's the thing. It came in just below expectations. They actually got Azure cloud growth of 29%. The market was expecting 30.6%. Remember, all it takes is slowing growth to burst this bubble. Not even shrinking, not even losses, just the growth slowing, and this whole narrative of the insatiable demand begins to fall apart. That's something we saw last week with Google and Tesla earnings. We saw a little bit of that yesterday. Also, Microsoft guided a little light on their Azure growth. They said they're projecting cloud growth of 28 to 29% in the current quarter, and that is versus the market expecting 29.7. So growth is slowing in the cloud computing segment. Now, cloud computing is a much bigger, wider segment, but within the cloud computing segment is their AI business. Now, Microsoft doesn't tell us how much money their AI business made. They don't tell us AI revenue or Copilot revenue. They just say the cloud unit, which includes AI. So they are wonderfully, conveniently vague as they say, don't worry, guys. AI is making us money. We swear we're not going to tell you how much or where it is. We're not going to tell you what that money is doing, but trust us, it's there. And trust us, the next big thing is just around the corner. And even though they're guiding for even lighter revenue growth in cloud computing next quarter, they're saying, don't worry, in the second half of 2025, things are going to be great, and that growth is going to reaccelerate. Why? Phase 3 profit. Nobody knows. They didn't say why. They're even starting to talk about, well, don't worry, all this capex, which tens of billions of dollars in capex is going to continue. So at NVIDIA's earnings, at least for the time being, will continue to impress because the big tech companies are just mindlessly pouring tens of billions into capex. They're saying that's going to continue. They're also saying, don't worry, we're going to be able to get ROI from these capex investments over the next 15 years, they said, which that just defies logic because at least, well, first of all, they said all of their capex is going into AI investments. All right. And of those AI investments, about 50% of that money is going towards GPUs and CPUs. Well, GPUs and CPUs don't last 15 years. I got news for you, Microsoft. You know this. The CFO that said that knows this. Those things, if you're lucky, you'll get maybe 5 years of life out of a GPU. So I don't know where they're getting this 15-year amortization idea from that, don't worry, all this capex we're making, it's going to give us earnings growth for the next 15 years. It's not. They'll be lucky to get 5 years if they run them right. And we don't even really know the obsolescence cycle on these GPUs. Who knows what these things are going to be worth in a few years. But you know what? Don't let that interfere with your mania narrative. Just mindlessly pile into the stock. Anyways, the stock sold off about 7%. Yesterday, after hours, it started clawing that money back. It's now down about 2% or 1% and change ahead of the opening bell. The NASDAQ is rallying like the blazes right now. Now, why is the NASDAQ rallying? It's got a lot to do with the semiconductor stocks because we also got earnings from AMD yesterday. AMD's data center revenue increased by 115% year over year. So companies are still just mindlessly, blindly pouring billions into buying GPUs and CPUs and chips. And of course, AMD, like ARM Holdings, like NVIDIA, they're chief beneficiaries of that just reckless AI spend. And again, they're spending it not because it's making them money. They're saying it's going to make them money later. And they're like, well, we want to win this AI arms race, which basically means all the cool kids are buying GPUs. So I guess we better do it too. AMD is making buku bucks off of that. Also, we got some rallying going on in the chips market and the semiconductor stocks this morning because of export controls. Last week, we talked a lot about how the U.S. government was going to impose these foreign export control rules on any company that sells American technology into China to try to prevent the Chinese military from developing AI. And last week, they were specifically worried about the Dutch company ASML and the Japanese Tokyo Electrons. Well, apparently the U.S. government leaked what their plans are. And yeah, they're going to slap these added export controls onto foreign countries, but they are specifically going to omit the Netherlands and Japan, which means this whole export control thing is just a pointless political stunt that has no teeth because they are carving out exemptions for the two specific countries that sell most of this stuff to the Chinese semiconductor companies. So we've got chip stocks almost across the board are rallying on that information this morning, along with AMD's earnings, and that is dragging the NASDAQ higher, which is more than offsetting the disappointing growth in Microsoft. Also, massive news this morning. The Bank of Japan has hiked interest rates by 15 basis points to 0.25%. Still a paltry interest rate, but it is the second rate hike this year from the Bank of Japan. It's a little bit of a surprise. Some people were expecting it. Nobody was really saying it was a likelihood, but almost everybody was saying there was a chance that it happened. So it wasn't a huge surprise, but it is a little bit of a shock. And the yen is surging this morning. Now, we've been worried about the yen carry trade for a while. It looks like, at least so far, it's not having any negative impact on U.S. stocks. I think the AMD earnings and the export controls is overriding that for the time being. But keep an eye on that yen carry trade and a lot of those yen shorts covering, because the yen falling against the dollar, the yen strengthening against the dollar, driving that USD JPY chart lower. That is going to put pressure on all the people who borrowed yen, transitioned into other currencies, and then bought risky assets with that money. Now, even though we've got chip stocks are soaring and the NASDAQ is soaring, and everybody, the AI mania, the bubble boys are blowing even harder than they were yesterday, Intel announcing 10,000 layoffs, or there is a person familiar with the matter who refused to be identified because nobody ever names their sources, saying Intel is planning on cutting thousands of jobs in the semiconductor industry. And this is ironic because Intel is one of those companies that's getting billions of dollars in grants from the U.S. government as part of the CHIPS Act to build new fabrication factories, new chip factories in the United States. And oh, my economic plan is so wonderful and we're creating all these jobs. And then the company we gave the money to is laying people off. Gotta love your government, your tax dollars at work, guys. But Intel stock is on the rise because of that and because of the other news going on in the chip sector. What else we got this morning? Wow, take a look at Boeing earnings. Very disappointing. Big revenue miss, big earnings miss. Boeing lost $1.44 billion in the last quarter. They are burning through cash like a drunken sailor. They're replacing their CEO, Dave Calhoun. He is out. Good riddance. What a mess that guy's made since he's been at the helm. But the stock is actually up this morning because apparently there was even more negativity baked into that Boeing cake than we realized. A little bit of a relief rally. I suspect the replacement of the CEO has some people buying the stock. I don't know. Maybe there was an outside chance they were going to try to save Dave Calhoun. I couldn't imagine they were going to try to keep that guy around again. What a mess he's made over at Boeing. And we got ADP private payrolls just came out. The U.S. economy produced 122,000 jobs in the most recent month. That is below the 150,000 expected and below the 155,000 from the previous month. So the job market continues to weaken. That has your Fed watchers thinking more rate cuts, possibly sooner. We've got the Fed later on today, too. My goodness, there's so much going on in the world. We've got non-farm payrolls on Friday this week. We got Meta earnings after the bell. We got Amazon and Apple earnings tomorrow. It has been a crazy week, guys. And because it has been such a crazy week, I have not scheduled the Patreon meeting for today yet, which means we're going to move that one on to Thursday. I apologize for that one. I'll put out the meeting notice later today. We're going to move Patreon to Thursday. Links down below to all that good stuff should you feel so inclined. Why don't we shrink my big melon of a head And let's get into these stories because we got a lot of ground to cover this morning. It is a busy day. Don't forget the like button and the subscribe button if you're new here. Come have your coffee with the Melonheads every morning. The S&P 500 is up 73 points, almost 74, 1.36% higher. Again, shrugging off that disappointing growth from Microsoft. The chip stocks are taking the whole thing higher this morning. S&P is up in a big way. The Dow is getting in on it a little bit, up 125 points or 0.31%. I suspect maybe the weaker dollar this morning is playing a little bit of a role in the rally in the Dow here. And also, we have got the NASDAQ is sharply higher this morning. That's an understatement. 433 points higher ahead of the open for the NASDAQ, 2.3%. Giving back or taking back everything it lost yesterday and then some. NASDAQ is looking really good here. Again, this is being helped by the decline in the dollar. Look at the DXY here, down 53 basis points or 0.5%. This is 100% being driven by that surprise rate hike by the Bank of Japan this morning. The yen is a major input into the Dixie math. So that's putting some upward pressure on stocks here. Looking over at the bond market, we got yields are lower once again. Notably, on the long end of the yield curve, the 30-year is down 3.8 basis points to 4.361%. We've got the 10-year is yielding just 4.100, down another 4 basis points this morning. The 2-year is at 4.34. That's down 2 basis points, almost 2 basis points. The inversion between the 2 and the 10 is now 24 basis points. And the 1 month is at 5.387, essentially unchanged from yesterday. So we got lower rates again. Looking over at the commodities board, it looks like gold and silver are liking those lower rates, and they're liking that weaker dollar this morning. Spot gold back above the all-important 2,400 level, trading at 24.19. That's up $8.64 or a third of 1%. And my favorite of the shiny spot silver is at 28.66. That's up another 27 cents, 28 cents this morning or 1% higher after having a pretty good day yesterday. Back above that all-important $28.30 resistance level. I'd like to see that. We've got coppers getting in on the rally, up 2% this morning. Platinum's down up 1% and change. Palladium is up 3.4%. And crude oil is up almost 3% this morning. This is interesting, guys. September WTI futures at 76.95. We've got some rallying in oil prices being driven once again by the Middle East. There was an Israeli missile attack on the leader of Hamas yesterday. He was killed in a missile attack. Now, the important thing about this missile attack is that it took place in Tehran, the capital of Iran. So an Israeli missile killing a Hamas leader inside a hotel in the capital of Iran. Now everybody is worried about what the Iranians are going to do in retaliation. Largely, except for that one missile salvo they launched a couple of weeks ago, the Iranians have sat this one out so far, electing instead to fight through proxies like Hamas and Hezbollah and the Houthis. But people are worried about Iranian retaliation right now, and energy infrastructure has been fair game in warfare for the last 2 years or so. We've had the Baltic pipelines were blown up. We've had refineries in Ukraine and Russia targeted. We had that entire port got leveled in Yemen last week by the Israelis. So there's worries about disruption to oil production here if the Iranians get involved in the war. So that attack is sending oil prices higher. I told you it was a busy day, guys. Let's just take a look at that silver chart real quick. Spot silver back above $28, back above that red line of 28.30. I've been saying that for a couple of days here. We really needed to bounce above that red line. We finally got that this morning. So signs of life in the metals market. We'll see if that one lasts. Also, we've got Bitcoin is marginally higher this morning, $66,291 as priced on Coinbase. That's up about $115. Not a lot of movement in Bitcoin this morning. Now let's talk about Microsoft. Microsoft's slow crowd growth signals AI payoff will take longer. They forgot to say if ever in that headline because I keep hearing about all this AI earnings, all this AI money. It's just around the corner, and yet nobody is making it yet. Only the people selling the chips are making any money off of this stuff. The AI companies still don't make any money, but don't let that stop you from mindlessly piling into stocks. Microsoft said it would spend more money this fiscal year to build out AI infrastructure, even as growth slowed in its cloud business. Another sign the payoff from hefty investments in the technology may take longer than Wall Street had hoped. Shares fell 7% on spending forecast, but paired losses to trade down 4% after the bell Tuesday. They're actually only down 1% and change right now. Microsoft said in a post-earnings call that Azure cloud growth would accelerate in the second half of fiscal 2025. Big tech companies have been pouring billions of dollars into data centers to capitalize on the generative AI boom. Google parent Alphabet warned last week that its capital spending would stay elevated for the rest of this year. Microsoft said its capital spending rose 77.6% to $19 billion in its fiscal fourth quarter that ends June 30th, with cloud and AI-related spending accounting for nearly all of the expenditures. For all of fiscal 2024, capital spending totaled $55.7 billion. So those numbers there, what they're saying is Microsoft's still pouring money into these chips, still pouring money into these data centers. So that tells me between that and what Google said about their capex and what Tesla said about their capex, NVIDIA is probably still going to post another monster quarter this time around because these companies keep pouring money into buying these chips, which means NVIDIA is still making it. Even though further upriver, you still don't have any AI companies making money. But for now, that doesn't matter because as goes NVIDIA, so goes the rest of the market. And this CapEx says that we don't care if we're not making any money. We're going to keep buying the chips just because everybody else is. Group CFO Amy Hood said that spending was necessary to support demand for AI services, and the company was investing in assets that will be monetized over 15 years and beyond. And I'm sorry, guys, that is just a flat out BS baloney statement right there. There is no way these computing equipment, these GPUs and CPUs are still going to be around in 15 years. They'll be lucky to see 5, maybe 7. Realistically, who's ever had a top of the line computer that was still operating at peak performance after 5 years besides freaking nobody? So for the CFO of Microsoft to say, don't worry, all these investments in AI, they're going to be monetized over the next 15 years. It's just not a true statement. It is pure hopium. Maybe the buildings that they're making for these data centers will still be around in 15 years, but that's not where the money they're pouring is going. Yeah, we'll still have the land and the tin roof over the building. No, guys, all this money they're pouring into chips, they got 5 years to make their money back on that if they're lucky. Microsoft predicted that the business would grow 28 to 29% on a constant currency basis in the July to September quarter, compared with estimates of 29.7%. So it's that lower than expected growth that has investors a little bit worried. And that followed a 29% rise in the quarter ended June 30th, which was below the estimates of 30.6% and marked a slowdown from the previous 3 months. So even though all these AI investments, they're going to pan out someday for some reason, we won't tell you what that is. We're already seeing the growth slowing. We're projecting it to slow even more, but don't worry, in the second half of the year, things are going to be great. Just take my word for it. The street doesn't have a lot of patience. They see you spending billions of dollars, and they want to see a pickup in revenue of that amount, said Daniel Morgan, senior portfolio manager at Synovu Trust, which holds shares in Microsoft. If these companies do not hit it out of the ballpark and are far better than estimates, then they're going to get knocked back, saying that stockholders or shareholders are going to start punishing these companies if they don't start delivering. And so far, all they're delivering is hype and hope. Microsoft stock, though, all things considered, is doing all right here this morning, down just 1.64%. It was down more than 7% at one point yesterday, trading at $416. That's down $6.92. Now, we've got AMD is ripping this morning. Another AI story. AMD jumps 9% in pre-market trading as global chip stocks rally after earnings, and geopolitics lifts the sector. I don't know so much about geopolitics. Well, geopolitics, they're referring to that export controls. Shares of global semiconductor firms rallied on Wednesdays as they were boosted by some positive earnings in the sector and a report of potentially less severe U.S. export restrictions on China. AMD was among the morning's big winners, with shares of up more than 9% in U.S. pre-market trading after the company reported a top and bottom line beat in its second quarter financial report. AMD saw strong growth in its data center business, driven by sales of its graphics processing units, which are used to train AI models. And to say they saw growth is an understatement, guys. Data center sales were up 115% year over year. Again, if Microsoft and Google and Tesla and everybody else keeps blindly pouring money into CapEx, then the NVIDIAs and the AMDs and the ARMs are going to keep posting these magnificent numbers. And so far, it looks like that's going to continue here. The strong set of numbers gave other U.S. chip makers a boost, including rival NVIDIA, which was around 5% higher in pre-market trading, along with Qualcomm. AMD is trading at $1.57 this morning, up $11 or 8.5% higher. So chip stocks are really jamming here this morning, and this is certainly helping. New U.S. rule on foreign chip equipment exports to China to exempt some allies. And this just goes to show that these export controls is little more than an election year stunt because they just took all the teeth out of it. The Biden administration plans to unveil a new rule next month that will expand U.S. powers to stop exports of semiconductor manufacturing equipment from some foreign countries to Chinese chip makers, two sources familiar with the rule said. But shipments from allies that export key chip-making equipment, including Japan and the Netherlands and South Korea, will be excluded, limiting the impact of the rule, said sources who were not authorized to speak to media and declined to be identified. So, yeah, they're going to revoke this rule that says foreign companies can't sell U.S. AI technology to Chinese manufacturers. And it's going to be, we're going to hurt the Chinese government's ability to develop AI for their military. And then we're going to go ahead and carve out the three countries that sell the most AI equipment or AI manufacturing equipment to those Chinese companies. We're going to specifically exempt them. And so basically this is a toothless rule. That's like saying we're going to have a ban on fast food, except we're going to carve out an exemption for McDonald's and Burger King and Wendy's. But other than that, we're going to ban fast food. Well, it's not really a fast food ban then, is it? You're just picking winners and losers. Japan, the Netherlands, and South Korea have been carved out of this. So this has stocks like ASML are rallying this morning big time, 7.65% higher for ASML after a big sell-off last week on the rumor that this export controls would affect them. Now they are being specifically carved out. And so their stock is rallying this morning. Also in chip news, Intel to cut thousands of jobs to reduce costs and fund rebound. Got to send a shout out to my friends at Macro Edge who are on top of this story right away this morning. I saw this one on X. Macro Edge is an excellent resource. I highly recommend you guys follow them. They had this story pretty early this morning. CEO embarks on an ambitious effort to regain share, and the chip maker is spending on research, development, and new plants. Oh, yeah, all those jobs created, even though we're cutting thousands of jobs. Intel plans to eliminate thousands of jobs to reduce costs and fund an ambitious effort to rebound from an earnings slump and market share losses. The workforce reduction may be announced as early as this week, according to people familiar with the company's plan who asked not to be identified because information isn't public and nobody ever names their sources anymore. Intel, which is scheduled to report second quarter earnings on Thursday, has about 110,000 employees, excluding workers at units that are being spun off. Now, Intel has already cut tens of thousands of jobs in the last 2 years since 2022. The rumor number is that this is up to 10,000 more jobs that are going to be cut. And, well, this market loves layoffs. They love cutting headcounts here. Intel stock up along with the whole chip sector this morning, 1.92% higher, up about another 58 cents, trading at $30.71. So don't worry, guys. We're pumping all this money into semiconductor industry so that we can create jobs right as we're cutting jobs in the semiconductor industry. You got to love your tax dollars at work here. And speaking of governments making no sense, Japan's central bank is finally hiking interest rates. They hiked their key rate hours before the Fed. The central bank pushes rates to 25 basis points or 0.25%. That's the highest since December of 2008. Oh my God, Japan has had their target interest rate below 25 basis points, below 0.25% since 2008. Modern monetary theory run amok. Japan is also announcing the pace of bond buying will be cut in half over a 2-year period. I'll believe that when I see it. Who's going to buy Japanese government debt besides the Bank of Japan when it's yielding 0.25%? Hint, nobody. So we'll see if they're able to do that. The Bank of Japan raised its benchmark interest rate and unveiled plans to halve bond purchases, underscoring its determination to normalize monetary policy. The BOJ hiked its policy rate to around 25 basis points or 0.25% from a range of 0 to 0.1%. So it was a 15 basis point rate hike. That's according to their statement on Wednesday. It also said it would reduce its monthly pace of bond buying to around 3 trillion yen or about $19.9 billion by the first quarter of 2026. That's kind of a long way off. The recent pace of purchases has been about double that amount. The yen strengthened more than 1.5% against the dollar, and equities advanced after the decision, led by a surge of almost 5% in a gauge of bank stocks. The yield on the 10-year Japanese government bonds rose 6 basis points to 1.055%, and yields on 2-year notes hit a 15-year high. And take a look at this chart of the Japanese yen. This is USD JPY, or the number of yen it takes to make $1. And look at this chart this morning. Down, it was below 150 for a while. Here we are at 150.19. But this thing, we had the Japanese intervention. The finance ministry started dumping dollars about 2 weeks ago. That sent the yen surging. It sent this chart a little bit lower. Then we had a little bit more intervention, if you will, a few days after that. And then last week, the yen carry trade started to unwind, and now we've got the BOJ hiking rates. And so the yen has strengthened from about 161 to the dollar on July 12th, now down to 150 to the dollar on July 31st here. Significant strengthening of the yen. And again, that's important because so many people and institutions around the world have borrowed yen, converted to other currencies, and then bought risky assets with that money. And as the yen surges in value, that means the carry trade, that the arbitrage opportunity they're making, the difference between the yield of the assets they bought and what they're paying on that yen debt or that yen short, is starting to shrink. And so it could cause people to start to unwind that yen carry trade, something my friend Michael Gayed on Twitter has been talking about at great length. And it looks like that may be starting, although the NASDAQ does not care this morning. NASDAQ is still riding high on those AMD earnings and that carve-out of the export controls, driving the chip stocks sharply higher. And we got another one. Boeing reports a wider than expected loss and weaker revenue. More bad news for Boeing. Boeing reported a bigger loss and weaker revenue than analysts expected for the second quarter, and lower revenue as both its commercial airplane and defense programs continued to struggle. Here's how Boeing performed. The loss per share was $2.90 adjusted versus $1.97 per share adjusted. Revenue was $16.87 billion versus $17.23 billion. So this is a miss on the top and the bottom line. Despite a challenging quarter, we're making substantial progress strengthening our quality management system and positioning our company for the future, said CEO David Calhoun. Even though parts are falling off of our planes, whistleblowers are winding up dead, and our spaceship has stranded astronauts up on the ISS for 52 days and counting. But yeah, we're making great progress on our quality control measures at Boeing. Just take my word for it. Boeing reported a net loss for the period of $1.44 billion, or $2.33 a share, compared with a loss of $149 million, or 25 cents a share during the year earlier period. Keep an eye on that rate of cash burn for Boeing, guys. They were suspected to be running very low on cash a few months ago. We didn't hear any updates on their cash position yet. I'm sure that will come up on their conference call if the analysts are doing their job and asking the right questions. Boeing is going to have to raise capital either through share issuance or debt issuance or borrowing at some point very soon here, burning through cash like get out. And also, we got more news. Boeing taps former Collins Aerospace CEO Kelly Ortberg to replace Dave Calhoun. Dave Calhoun is out. Collins, Kelly Ortberg is in. I'm not sure when the change takes effect, but we're looking at a CEO change also this morning. I suspect that's why Boeing stock is up a little bit. Probably investors are at least a little bit reassured that the CEO is getting fired over this, and good riddance. Again, Dave Calhoun has done a miserable job at that company. He was brought in to fix the quality problems. Remember, guys, that's why he was brought in after those 737 MAX crashes that killed over 300 people. He was going to fix everything. Well, he clearly did not do that. And so him losing his job and bringing in somebody else apparently is worth 1%, despite that big earnings and revenue miss from Boeing, trading at $188.73, up $1.87 this morning. And last but not least, guys, we got ADP payrolls. This is private payrolls, something of a preview of the non-farm payrolls, which are more important. We'll get those on Friday, but this does give us at least a hint about the health of the private sector job market. The U.S. added 122,000 jobs for the month of July. That is well below the 150,000 that were expected and below the 155,000 that we had in the month of June. We also saw some slowing wage gains in this ADP report. And we got this quote from the chief economist at ADP, Nella Richardson, saying, with wage growth abating, the labor market is playing along with the Federal Reserve's effort to slow inflation. If inflation goes back up, it won't be because of labor. That's interesting. If inflation goes back up, that won't be because of labor. Is that something of a jab at the Federal Reserve? Because all the Fed ever talks about is raising interest rates to stifle demand and bring supply and demand for labor back in line. In other words, put people out of work so they can't afford to pay higher prices for things. Isn't that nice of the Fed to do that? That's basically they're trying to put you all out of work, and that's how they're going to fix things in the economy. Well, it's working. Wage growth is slowing. And she's saying if that doesn't fix the inflation problem, it is not the fault of the wage earner. Pay attention, Keynesians. And I just want to say thank you very much to Mr. Cole Marsh. Thank you, Cole, for the super chat, sir, and the support of the channel. Cole is saying so much to see. Wherever shall I look? I don't know, man. Take your pick today. You got chips, you got AMD, you got Microsoft, export controls, the Bank of Japan hiking, Intel laying off. Oh, we've got the Fed later today. They're probably going to do nothing, but they're probably going to tell us they're going to hike in September. So will Jerome take a dovish standpoint, or will he be a little bit more hawkish? Who knows? We got some labor data that's a little bit dovish today. I don't know. It supports rate cuts, but then that big labor data on Friday, the non-farm payrolls, that's a big one. And guys, I think the labor data is very important right now because unemployment is rising and it's picking up speed as it's rising. So pay attention to those labor data points. Cole, look wherever you want today, brother. There is no shortage of stories. There's some days when it's hard to put a show together because there's just not that much happening. Today is definitely not a day like that. Thank you, sir, for the super chat and the support of the channel. And thank you to Zeeble Fritz for being a member for 2 months. He says, Kamala advertising before your stream. How feel you? Look, if Kamala wants to spend her money advertising to my viewers, is that money well spent? You tell me. Again, I prefer not to get too political here. I tune out political ads, guys. I'll be honest with you. When political ads start playing, whether it's from the red guys or the blue guys, I'm thinking about ADP payrolls. I'm thinking about CPI statistics. I'm thinking about buy now, pay later. I tune it out and I wait for that big, beautiful skip ad thing to highlight so I can click on it. And I really hope you guys don't click the skip ad button because that kind of hurts my bottom line too. Maybe I should shut up now because I'm shooting myself in the financial foot here. But yeah, I don't pay a lot of attention to political ads, guys. It's an election year. Hold your nose, lower your head. We'll get through it. Thank you, Zeeble Fritz, for being the melon head. And thank you, Steve Woitis, who says, if AI fails to impress, the sell-offs could be brutal. Steve, that is mildly put, brother. Look, this is since ChatGPT was announced in November 30th of 2022, the S&P 500 has added over $15 trillion of market cap. All right, now it fluctuates. There's been some sell-offs in the last couple of days. Maybe it's a little lower now. But AI Mania is a $15 trillion stock bubble. And you've got people who've got no business trading in derivatives are out there selling zero DTE puts against this stuff, shorting volatility. If the AI bubble pops and a stock like NVIDIA starts to correct lower at a time when unemployment is rising, and so you've got less money being passively poured into index funds, which are largely pumping money into NVIDIA stock. If that stops at the same time we get the bubble popping, at the same time funds start blowing up because they shorted volatility or they bought levered single stock ETFs, you better believe the sell-off could be brutal. But you know what? I'm just a doomer, man. So, don't take my word for it. Me and my fellow doomers over at DNN, we just call it like we see it. Just take out your lipstick, paint over that pig, forget what the doomers are saying, right? Just buy. Isn't that the message from the mainstream press? Whatever you do, just keep blindly handing your money off to the services industry that pays for the advertising in the financial press, who is telling you just keep handing your money over. I'm sure they have your best interests in heart when they say that, right? Certainly not theirs. Anyways, thank you, Steve. I appreciate the super chat and the support of the channel. And thank you to the Metal Seer, who's saying also took out guy killing 241 Marines 10 years ago. Is that the Beirut embassy? The Beirut embassy barn? No, 241 Marines 10 years ago. I don't remember a 241 Marines dying 10 years ago story. I do remember the Marines at the embassy bombing in Beirut. Is that who they took out? I think the number was something like that. I'm sorry, guys. When you talk about hundreds of people being killed in Middle East violence, you just have to be a lot more specific, sadly, because there's just too many examples of that. And again, we're desensitized to it. But look, here we are, the world holding their breath again, an Israeli missile strike inside Iranian territory in their capital. Look, I shed no tears for the guy they killed. Good riddance. He was a stain on humanity, and I will not miss him. But at the same time, now you got to worry about what's the other side going to do. Missiles flying back and forth, innocent people caught in the crossfire, other countries being roped in, global trade being disrupted, energy prices rising, dogs and cats living together, mass hysteria. Or as we say, Wednesday, because this kind of crap just happens every freaking day. We're so desensitized to it. Hey, call me old-fashioned. Maybe one day we're all going to stop killing each other and we're just going to do business and make money. I just throw it out there. You guys do what you want with it. You can throw it back and you go, but the other side and my religion and their religion and this and that and all these other stupid reasons we hate each other. Meanwhile, other people get rich selling bombs. It never ends, guys. It's been a crazy morning and it's going to be a crazy day. A lot more ahead of us. So stay tuned for this week. And I just want to say thank you, everybody, for having your coffee with the Melonheads. Thank you to all my Patreon supporters and magnanimous Melonheads. I'll be posting that Patreon meeting for Thursday. I'll post it later today. So we'll be having that one tomorrow. Thank you, everybody, for the super chats and supporting the channel. Also, hi, Mom. Hi, Dad. Love you guys. Till next time, everybody, live small and dream big.